Welcome to the Radio Revenue Podcast. Welcome to the Deep Dive. Today, we're taking a plunge into a document that often stays behind closed doors for most people.
Right, the 10K filing.
Exactly. Microsoft's latest one for the fiscal year ending June 30, 2025. And, it might seem dry, but it's absolutely packed with crucial insights.
Think of it less like a report and more like a strategic map.
That's a good way to put it. It's like your backstage pass to understanding this tech giant. And we'll do it without you having to wade through hundreds of pages of jargon.
Precisely. We can see where they're winning, where they're putting their money, their big bets, and also what challenges they see coming.
Yeah, the risks.
Right. So our mission today is really to pull out the most important stuff for you. Kind of a shortcut to being really informed about where Microsoft stands and where it's headed.
And the scale here is just mind-boggling. Get this. As of December 31st, 2024, the market value of their common stock held by non-affiliates.
So basically held by the public, not insiders.
Yeah. It was $3.1 trillion.
Trillion. Wow.
That number alone tells you the kind of weight we're talking about. Okay, so let's unpack this. Where should we start? Maybe the foundation, the financials.
Sounds good. The big picture numbers.
Okay, so kicking things off with fiscal year 2025. The numbers are, they're incredibly strong. Total revenue hit $281.7 billion. That's a 15% jump from 2024.
15% growth on that base is pretty remarkable.
Right. And it wasn't just revenue. Operating income climbed to $128.5 billion. That's up 17%.
Okay, so profitability is growing even faster than revenue. That usually points to efficiency gains, leverage.
In the bottom line, net income reached $101.8 billion. Basic earnings per share, $13.70. Huge figures. What's the real story behind these numbers for our listeners?
Well, like you said, it's the consistency in that accelerating profitability, growing operating income faster than revenue at Microsoft size. That's not easy.
It's just good management, strong strategy execution.
Definitely. It shows they're not just expanding, they're doing it very efficiently. And look at their cash flow. Cash from operations went up by $17.6 billion.
To how much?
To a massive $136.2 billion for the year.
Wow. That's a lot of cash.
It's an extraordinary amount of liquidity. It gives them this huge war chest, to fund future growth, make acquisitions, invest heavily, weather any storms.
And in return value to shareholders too, right? The filing mentions that.
Absolutely. A big focus there. Their board approved a new $60 billion share repurchase program back in September 2024.
Which started when?
April 2025. And just in the last quarter of fiscal 25, they gave back $9.4 billion through buybacks and dividends combined.
$9.4 billion in one quarter.
Yep. And the quarterly dividend was $0.83 per share, so $3.32 for the whole year. It's a significant return.
Okay, so the financial base looks incredibly solid. But moving beyond the numbers, the 10K basically screams one thing about the future, doesn't it?
Oh, absolutely. It's impossible to miss. Artificial intelligence.
AI.
It's everywhere in the document.
It really is. Their mission statement explicitly talks about making digital tech and AI broadly available and, importantly, doing it responsibly.
Responsibly. That word comes up a lot. It does. They state very clearly they believe AI is, quote, fundamentally transforming productivity for every individual, organization, and industry.
So not just a tool, but a fundamental shift.
Exactly. It's not a side project for them. It's core. It's woven into their entire strategy, every layer of the tech stack.
From the cloud infrastructure up to the apps people use every day.
Precisely. And that emphasis on responsible AI, safety, security, right from the start.
Yeah.
That's going to be critical as AI gets more powerful.
And then there's the OpenAI partnership. That seems huge.
It's strategically vital. They're not just a major investor. They have rights to OpenAI's IP, the models, the infrastructure, to bake into Microsoft products.
Right. And the OpenAI API is exclusive to Azure. What does that mean practically?
It's a massive draw for Azure, their cloud platform. If you want to use OpenAI's leading models at scale in an enterprise setting, Azure becomes the obvious, really the only choice for the API access.
So it creates this really powerful feedback loop. Better AI drives Azure adoption. Azure is the platform for AI.
Exactly. It's a deeply symbiotic relationship. More than just an investment, it's a cornerstone of their future growth.
And we're seeing that integration pop up everywhere now, right? Like the AI PC concept.
Bringing AI capabilities directly onto devices and using Windows to push their cloud business. It's all connected.
They also mentioned investing heavily in training people on generative AI.
Yes, providing access to Digital learning, resources, that's a big part of it too. It's not just about selling the tech, it's about enabling people and businesses to actually use it effectively.
Which could really reshape the skills landscape globally.
Could have a massive impact, yeah.
Okay, so AI is the strategic heart. Now, the filing breaks Microsoft down into three main business segments. Let's dig into those.
Right. Productivity and business processes, intelligent cloud, and more personal computing.
How are they each doing? Where's the action?
Well, intelligent cloud is still the growth engine, mainly driven by Azure.
What was the growth there?
Azure and other cloud services revenue grew by a remarkable 34%. 34%.
Wow. And what's driving that, besides the AI pull?
A key advantage they highlight is their strength in hybrid cloud.
Allowing companies to mix their own data centers with the public cloud.
Exactly. For many big companies, going all in on public cloud isn't practical right away. Microsoft lets them integrate seamlessly. It's a huge selling point, offers flexibility.
Makes sense. It bridges the gap. What about productivity in business processes? Office, LinkedIn.
Still very strong. Microsoft 365 commercial cloud revenue was up 15%, and the number of seats, users, grew 6%, especially in smaller businesses and frontline workers.
So deeper penetration there.
Yep. And the consumer side of M365 also grew 11%, hitting 89 million subscribers.
89 million individual subscribers.
Plus, LinkedIn revenue saw a solid 9% increase across the board. And Dynamics 365, the business application suite, grew 19%, driving the overall Dynamics segment up 15%.
So really consistent strength across that whole productivity and business software area.
Very much so. It's deeply embedded in how businesses operate.
Okay, and the third segment. More personal computing. This includes Windows, Surface, but also gaming, right? And gaming seems like a big story now.
No, absolutely. Gaming revenue overall was up 9%. But the key number is Xbox content and services revenue that jumped 16%.
And the filing points directly to the Activision Blizzard acquisition for that.
Explicitly, they paid $75.4 billion for Activision Blizzard in October 2023, and they say it's accelerating their gaming business across mobile, PC, console, cloud, everywhere.
That deal really did reshape their position in gaming, didn't it? Made them a much bigger content player.
Absolutely. It was a massive move, especially giving them a huge footprint in mobile gaming, which is the biggest part of the market. It wasn't just about consoles anymore.
And what else is in that segment? Search advertising.
Right. Search and news advertising revenue, excluding the costs paid to partners, that grew by 20%.
20%, that's strong too.
Yeah, driven mainly by higher search volume, so even their sort of more traditional web services are performing well, shows the breadth.
Okay, so growth looks strong across the board. AI strategy is clear. But 10Ks are also about the risks. They have to lay those out.
And they do. It's a very clear-eyed assessment of the challenges.
So how does a company this massive even begin to manage all these complex, evolving threats?
Well, cybersecurity is right at the top, unsurprisingly. They talk about their Secure Future Initiative, the SFI.
Right. Launched late 2023, expanded mid-2024.
Based on three principles: secure by design, secure by default, secure operations, trying to build security in from the ground up.
But they also admit to incidents.
They do. They mention a nation-state actor getting into email account source code in late 2023. It's a stark reminder that even with massive resources, the threat is constant and sophisticated.
And the risks aren't just external cyber attacks. AI itself, their big bet, carries risks.
Yes, the filing is quite candid about that. Concerns about flawed algorithms, biased data leading to bad outcomes.
Or AI generating harmful or offensive content.
Exactly. And then there's the whole ethical dimension, plus the evolving regulations like the EU AI Act. These could lead to legal trouble, fines, or just damage to their reputation. It's a tightrope walk.
Innovation versus responsibility.
Precisely.
And beyond tech-specific risks, there's the sheer weight of global regulation, isn't there?
Huge factor. They operate everywhere, so they face this incredibly complex web of laws on privacy, data protection, competition, you name it.
And that IRS issue seems significant.
Very. The IRS wants an extra $28.9 billion plus penalties and interest.
Wow. For tax years going way back 2004 to 2013.
Yeah, related to how they price transactions between their own international divisions transfer pricing.
Sure.
Microsoft is fighting it hard, but it shows the scale of these regulatory and tax battles.
And then there are the more kind of operational or global risks.
Right. Things like supply chain disruptions. Getting enough GPUs, those specialized chips for AI, is a constant challenge.
And just the cost of running all those data centers must be enormous.
Building them, powering them, maintaining them globally is a massive operational cost and complexity. And finally, They flag geopolitical instability.
Conflicts like in Ukraine,
Yeah.
Israel-Hamas.
Yeah, things that can disrupt trade, supply chains, market access. It's a complex world out there, even for Microsoft.
So, wrapping this up, what we've seen today is, well, a giant operating at incredible scale, really strong financials, a super clear strategy focused on AI and cloud.
Very ambitious.
But also a company that's very aware of the serious risks, cybersecurity, AI ethics, regulation, global instability. They're not ignoring the challenges.
Indeed. And looking at a company through its 10K like this, it gives you such a different perspective, doesn't it? You see beyond the product.
Yeah, you see the whole machine, the tech, the finance, the global strategy, the risks they're balancing.
It really underscores that innovation doesn't just happen. Even the biggest players are constantly navigating this incredibly complex environment.
So for you, the learner, maybe the thought to chew on is this. As AI keeps accelerating, how will this tension play out? This balance between pushing innovation forward super fast, like Microsoft is doing, and managing the risks responsibly, how will that shape the economy and, your own digital life? Keep digging, keep asking questions. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.